I think that it's a situation of being out of debt is very important. Paying yourself first is very important. And I really do believe if you're not a contrarian right now and look at precious metals as wealth, not as an investment, in a world that is shifting away from what has been status quo for a very long time, you'll end up being a victim.
StockPulse.com. We're on location, Vancouver Resource Investment Conference 2023, and I've got Andy Schectman here, who runs Miles Franklin. And Andy, you've been around quite a while. We've had several chats in our day, and I like how you roll. I like how you pay yourself in precious metals. I thought that was one of the coolest things. So yeah, I guess welcome.
Thank you.
What's your vibe on the show, and what's your vibe on the markets?
Vibe on the show, it's amazing. There's a lot of people here who I think are trendsetters. A lot of people here who are kind of driving the ship, if you will. That people that are not mainstream, that are thinking outside the box. Not just the people that I follow, but also the people that I've had a chance to talk to. There's a different vibe right now. I think people are waking up right now for the first time that I can remember in a very long time to the necessity of having some sort of a hedge against the system. And I don't know, it just seems like a different vibe. People are not here to get rich. I think people are here because, a lot of people are here because they're very concerned about what's happening to the system.
Defense.
Yeah. And that to me is encouraging. So, look, I don't sell gold and silver to get wealthy, and I don't sell gold and silver because the sky is falling. But I think for the very first time in my career, things are moving in a direction where you have to be on defense. You have to, I think, as Rick Rule says, if you're not a contrarian, you're going to be a victim. And I think now more than ever, that's true.
Well, you've got the sound of war happening, so obviously that's something that's concerning from a couple different places, and talking about going to war in 25 by some generals here. So yeah, there's definitely I don't know what's the word here, a timely situation here. So talk to your buddy here, the economic ninja, and he said the number one thing for the year was to get out of debt.
Yeah.
What do you have to say to that?
There's no question. Letting the laws of compounding interest work for you instead of against you is huge. And Travis is very, very smart in that respect. And I would tell everyone, like you said, pay yourself first and get out of debt. And that's always been something that I have focused on as far back as I can remember. To me, the biggest issue is the potential loss, however, and the ramifications this will have to all of us of the petro standard, the petro reserve standard, of Saudi Arabia joining the BRICS nations, of Saudi Arabia admitting publicly that China is their most important trading partner in oil this year and for the next 50, and then just the other day in Davos saying that they're open to taking other currencies. If you look at the flow of gold that is leaving the Western vaults, both Comex, the LBMA, and also the Swiss refineries, all of it going eastward to places like China, to Saudi Arabia, to India, to Russia, we are witnessing, I believe, a global shift away from the dollar as the central world reserve currency, the settlement currency for oil. And when you see the West talk of going green and moving away from fossil fuels and combustion engines, and yet the BRICS nations and the Shanghai Cooperation Organization and the Belt Road Initiative, all of these groups of humanity that comprise pretty damn close to 80% of human population, the ramifications of losing the reserve status, the petro reserve status, which I believe we're this close to doing, is massive. And when you talk about debt, what will happen when we lose the reserve status, which I think we are this close to doing, is all of the dollars, you see, since 1974, it's been the protection of the Saudi kingdom that has granted us the petro reserve status. We promised the Saudis will protect them, and for that, OPEC and Saudi Arabia will denominate globally oil in dollars. Well, when Saudi Arabia says we're joining BRICS, when Saudi Arabia says China is our most important trading partner for the next 50, and when Saudi Arabia says we're going to take open to taking other currencies for oil. What that basically says to me is that we're this close to losing the sole petro reserve status. If every country on the planet since '74 has had to own dollars to buy oil, it's created this massive synthetic demand. If that changes like that, and the dollars get dumped, flow home in a tsunami of inflation eastward or westward to the shores of the U.S., what that will create is a hyperinflationary scenario where interest rates spike. And when interest rates spike, debt is certainly not a good thing to have, but what it will also do is inversely affect valuations of assets like stocks, bonds, and real estate. To me, it's the Great Reset. To me, it's the potential for the Great Reset, where as a compensation for the dumped dollars globally, as everyone no longer needs to hold dollars because they'll buy the new petro yuan, which is immediately convertible into gold on the Shanghai Gold Exchange, or they'll buy the new BRICS currency, which we've been told will be pegged to commodities, or they'll choose anything other, maybe it's rupee or ruble or whatever they say. We're going to take not just dollars anymore, which I think is coming. Those dollars come home, and to compensate for the loss of purchasing power, interest rates have to spike.
We're a banana republic, and we're done.
This is why Travis would say, get out of debt, because as rates rise, being in a variable rate debt situation is a very, very dangerous thing. In particular, in a place like Canada here, I found it interesting to note that they don't have 30-year mortgages here. They have 5-year loans that are amortized over 25 years, but it resets every 5 years. So if you bought a piece of real estate here in Canada, and a few years ago locked into a 5-year loan at 2.5% over 25 years, it resets every 5. What are rates this time when it resets? What are rates going to be next time when it sets? And so I think that it's a situation of being out of debt is very important. Paying yourself first is very important. And I really do believe if you're not a contrarian right now and look at precious metals as wealth, not as an investment, in a world that is shifting away from what has been status quo for a very long time, you'll end up being a victim. Be a contrarian or end up a victim, to me, is how I would say this, to me, is what I identify from this show.
Yeah, and I'd back you up on that. Excuse me. And say that we have life insurance, health insurance, there's money insurance.
Right.
You got the money insurance of Miles Franklin. So yeah, talk about precious metals, talk about the demand for them, talk about the shortage if there is one, and talk about the Silver Institute. Says we're what? How many million?
1.9 million ounces.
There you go. Where's that come from?
Excuse me, 190 million ounces short, almost 200 million ounces. Where does it come from? When you look at, to me, when we talk about supply demand, I think you have to look at the exchanges, the LBMA and the Comex, which have witnessed record withdrawals, not just little bits, but record withdrawals to the point where the LBMA just publicly said if they see withdrawals in 23 like they did in 22, there'll be no silver left. They have the lowest amount of silver in the history of the LBMA, in the 140-year history since they started keeping records on the exchange. There's only 33 million ounces right now backing the registered category on Comex. Those are the bars that are backing the contracts, the bars that could stand for delivery. And when you realize that India imported 304 million ounces, and yet in 2022, and yet there's only 33 million ounces backing Comex, take a step back. That's the registered category. The entire Comex ecosystem has under 300 million ounces in it, of which only 33 million are backing the bars. The other 265 million are what's called eligible. Those are bars that could be offered for sale, but they're in strong hands. They're like people like me. I own silver at Brinks JFK in an eligible category, and they're not for sale. They are mine or my clients or others. They're not for sale, yet it's in the Comex ecosystem. Why leave it in the Comex ecosystem? Why not pull it out? Like we've been seeing massive deliveries outside the ecosystem, is because it offers industrial liquidity. If Elon Musk says, I'll pay $30 an ounce premium for everyone who wants to sell their 1,000-ounce bars, bang, you could transfer it from eligible to registered. And when you realize that we're seeing record withdrawals outside of the ecosystem, meaning they're being pulled off the exchange, it should carry extra weight, because what that means is it's lost all of its industrial liquidity. Once it leaves the Comex chain of custody, to get it back in, they'd have to be reassayed at a great cost and time lag. So when you see deliveries that are in the hundreds of millions of ounces between Comex and the LBMA, leaving these epicenters of supply and liquidity, it's a big deal because they've lost their industrial liquidity. It's a really big deal. Now, for the past 3 years, getting product on a retail basis has been the biggest challenge of all of our, in my position, of all of our lives, all of our careers, anyone who owns a metals company. Right now, however, over the last month and a half, it's really caught back up. And I think the only reason that I can come up with why premiums have collapsed and availability has gotten better is a short-term phenomenon where since Thanksgiving and with Christmas holidays and the New Year's, I think people just wanted to get out. For the first time in 3 years, go see their family, go on a beach trip without wearing a mask, without having restrictions. You know, I was just talking to a friend of mine here who can't even travel into the States because his wife is not American and they hadn't had a vaccine. So that type of mentality where you can't even fly into the States to see his in-laws, I think that's been pervasive here in North America, where, look, families have been disjointed, can't go and hug your grandmother on Christmas because of the health concerns. And so what I'm getting at is that I think this year was different, and the pandemic's gone behind us, so people just unplugged and wanted to go be with family. And since Thanksgiving, premiums have collapsed. The whole industry has witnessed a massive slowdown. Now it's picked back up since after the first of the year, but between Christmas and New Year's, it's as if someone shut off the light switch. In conjunction with the 2023 allocations from all the world mints coming out, it is the best value I have seen in 36 months, not even close, and the best availability. But if you realize, Rob, that less than 1/2% of the public in the United States in any allocation owns precious metals, when that realization comes, when people wake back up to that, like that, it disappears again. I truly do believe, especially when you see the drawdown from the biggest supply centers in the world, first, that this market ultimately will be defined on two levels. One, by prices that are very high. I think they ultimately will get high at some point, but more realistically, this market will be defined by an inability to easily source product, and it represents but a pimple on the rear end of the elephant. And I, quite frankly, think that by the time people wake up to owning it, it'll be very, very, very difficult to get, as you can witness by the drawdowns of supply to the lowest level ever on Comex and the LBMA.
Well, you're the authority on this, so you ought to know. Where do people find your writings, and here you go, Andy.
So send me an email at info@milesfranklin.com. We have a new interactive website that'll be launched in the next week or two that'll allow people to buy online. Look, I'm old school, and I think metals belong in an analog capacity rather than in a digital world. And I like relationships. We'll be a hybrid. People can call us or send us an email at info@milesfranklin, request a price sheet. Our prices will be as good or better than anyone in North America. And in 33 years, we've never had a customer complaint in $8 billion in sales. We're one of only 27 U.S. Mint authorized resellers. And I left my corporate office in Minneapolis when I moved to Florida 2 years ago because it's the only state in America where you have to be licensed and bonded to own precious metals, or to sell them rather, as a company. And almost every company in America has boycotted Minnesota because of this, because it's a federally non-regulated industry. Minnesota is the only entity, the only state in North America that regulates this non-regulated industry. So on top of what I believe is having the best reputation in the industry and being U.S. Mint accredited, we're also licensed and bonded in the state of Minnesota, making us kind of an anomaly. The unicorn in the industry, and I very proud of it and hang my hat on it. And I can promise you, your listeners won't be the first one to file a complaint with us for sure.
It's Andy Schectman, Miles Franklin, the VRIC 2023. Andy, appreciate the time.
Rob, you too, buddy. Thank you. Look forward to seeing you in October.
Excellent.